All right. This is Chris Marbella Commercial Finance. We're live here live on YouTube. We're monitoring at about 7 minutes from now. The Federal Reserve is going to report what they're going to do with federal funds rate. Most analysts are estimating 1/4 to 1/2 point reduction. That would be huge for lending demand. Lending would go way up. There's a lot of borrowers out there that purchased net lease properties right around the COVID time frame that had very low rates, even as low as like 2 to 4%. So when they go to refinance, they really can't refinance 1-for-1 because they don't debt coverage. When they take their NOI divided by their mortgage payment, they'll be like 1.0 to, or maybe even 0.9 to 115. And most lenders out there want to see like a 125 to 130 minimum debt coverage. Although we've gone as low as 115 on certain transactions, but this would give the commercial real estate market a lot of relief. You would see a tidal wave of refinances, cash outs, and net lease purchases would get sweetened up because now they would be getting more cash flow. As the rates go down, you get more cash flow. So we've got about 5 minutes out till we know the decision on the federal funds rate. As of late, there's been a lot of interesting statistics. Unemployment claims, I believe, came in at 263,000, the initial claims, which was, they haven't seen that for 4 years. That's highest it's been in 4 years. Inflation, surprisingly, is very sticky. Month over month in August, it was 0.4. Annualized, it was coming in right around 2.9%. PPI, Producer Price Index, was negative 0.1% in August, and year over year, right around 2.60. So we're still seeing stubborn inflation. We've got stubborn inflation on insurance, food, eggs, traveling, apparel. Gasoline has slightly come down, but I have a graph here on the federal funds rate. You can see what it's done. This is kind of what the federal funds rate has done as of late. And so you can see it's in 2022, it was practically zero. And then it started to tick up. The Fed must have been very hawkish from 2022 to 2024. And then as of late, it started to tick down again. So it'll be interesting to see what happens with today. Let me show you this. This is crude oil. It's down to $64.13 a barrel. So we are seeing some relief in crude oil. Here's kind of economy at a glance. As you can see the COVID time, the unemployment rate really, we've seen inflation ticking up ever since right around 2020. So let's go over to CNBC. I wanted to go over to CNBC to see what the decision here is on interest rates. Let's do that right now if I can do it. Let's see. Okay, hold on one sec. Let's see if we can get this going here.
A bit, but gold at a record high as well.
CNBC should announce what the Federal Reserve is deciding for rates.
Bitcoin, that's actually a relatively small move. All right, enough talk. Let's get right now to our all-star panel here.
Okay, they have an all-star panel.
We've got David Kelly, JP Morgan Asset Management,
Francis
Arnold, RBC Capital Markets, and Jim Karen of Morgan Stanley Investment Management. All right, Bank of Canada is down. So here, Federal Reserve U.S., Francis, what happens?
One interesting thing, the 10-year Treasury yield's kind of going up on this news.
Going to emphasize that labor
It was at 402 at the beginning of the day. I've been tracking
which
it.
is still too strong.
It's right now 404. 404.
Still above target. So this is a central bank that's
doesn't sound like a cutting environment to me.
Doesn't sound like one. So I want to hear how Chair Powell is going to navigate what is still an inflation problem and likely to be
definitely a stagflation
while he's still cutting.
Okay, David Kelly, do we get a cut today?
Yeah, we do. We get 25
saying
basis
25
points, but
basis.
We shouldn't cut today because
shouldn't cut.
Well,
We'll cut.
the reason we shouldn't cut is because the Fed is further away from its inflation objective.
I'll be covering Jerome Powell right at around 11:30.
At the end of the year.
We may cut off till 11:30 and then we'll come back on.
But the problem is there's politics.
But I want to hear
and there's
what's
also
going on
messaging. I think
with the
what we're really
interest
looking at
rates
is
right here.
how many
We've got
people
like
essentially
1
get
minute.
I
And
mean, is it a prerequisite?
let
in
us
order to
know
be
what they're going to do with the federal
in
funds rate.
Game for Fed chair that you have to descend 50 basis points a day? Is that part of, is that just table stakes? So that's one question. And then the second question is, does Jay Powell have to defend cutting rates today by saying the economy is looking really, really weak?
Because that messaging
They're
already
hurts the economy.
taking advantage of the lower interest rates.
It's a rate
Somebody
cut does
wants
not help
me.
the
That's a
economy
good
grow faster
thing.
at this point.
Jim?
Demand for net
So I think
lease
they cut
financing is
25
going to
basis
go up
points, but I don't think it's
exponentially once
just
this
about the
happens.
economy. I also think it's about the
Everybody's
balance
going to
sheet,
be
and I also think
rushing
it's
to
about liquidity.
refinance
So what
and
we've
cash
started
out.
to see is that repo rates have started to rise, bank reserves are falling. As the Fed has kept interest rate policy unchanged and the balance sheet has started to shrink, that has created some
A
liquidity
couple
tensions
people
in the
just came
markets.
in. If you're
So
in the
part of the reason why I
watching, we're
think the
just
Fed
watching
should
to
cut
see what the
rates this
Federal
time
Reserve's going to
around
do
is
today
address
with the
those
federal funds
liquidity
rate.
issues and repo rates rising and
They're
bank
thinking
reserves
again,
and all that.
25 to
So
50
I agree,
basis
you know,
point
with
drop.
David and Francis, look, you know, we can debate the
If you're in the
economics
room
around
here,
what we
love to hear
talk
your
about, the
comments.
unemployment rate.
Definitely
But
comment.
the reality is, I think
Post
that
a
the
comment.
Fed's
I'd love
insurance is
to
really
hear what your
based on
thinking is.
Francis, we've got 1 minute to go.
All right, 1 minute to
and we have
go.
possible dissents.
1 minute
How
and
much
counting
does
on the federal funds
non-interest rate
rate.
stuff matter?
Well, for the economy, it's not what the non-interest rate stuff is. It's what the interest rates actually do. And I'm going to pick up on David's point here. We got to be really careful. We're going to get headlines all today. The Fed's cut rates. This is not going to improve the U.S. economy very much at all. What ails the U.S.
They're
economy
going to
is
bring
not
in
interest
Stephen
rate sensitive.
Moran.
It's a
The
massive
Senate
trade shock.
confirmed
It is a
him
labor shortage. It's an
as the new
uncertainty
Board of
shock at
Governors
play. So even though
on the Federal Reserve Board. That was the guy Trump was pushing for. So that went through. Couldn't get rid of Lisa Cook, though. That didn't go through. So Trump lost in that regard. But he did get his guy on the Board of Governors,
electricity bills
Stephen Moran.
that are up 20% a year.
Or you know what I call it, the tariff flu. The tariff flu both slows you down and also gives you a temperature. And that's really what's the problem here. And the
I got my Starbucks coffee.
All right,
we love
so
Starbucks.
10 seconds to go. We got
Want
the
to
Dow
finance more Starbucks?
0.6%. Small caps, the mid cap stocks up about 0.2%. But I'm going to stop talking because
all right, here we go.
Federal Reserve cutting interest rates by a quarter point as expected.
All right, a quarter point. There you go. They dropped rates by a quarter point.
Governor and former CEO, current CEA chair, Stephen Moran dissenting.
That's kind of what I thought.
Point cut. The median Fed official looking for 2 more rate cuts this year, but just barely. I'll get you details on that in a second. The statement importantly says the balance of risks have shifted. Downside risk to employment has risen. Job gains have slowed. Unemployment has edged up. And economic activity has moderated. At the same time, the statement does note that inflation has moved up and remains somewhat elevated, but clearly the Fed favoring concern about employment here over the concern about inflation. It says uncertainty remains elevated as well. On the rate outlook and the so-called dot plot, some really interesting movements here. As I said, the median Fed official forecasting 2 more rate cuts this year, but just barely. There was a massive disagreement among officials on the rate outlook for 2025. Very unusual.
Dow's up 354 on that news. That's great.
Here. One official.
Somebody thinks it's positive.
There was no other dissent in favor.
Companies will have less cost on their interest side now.
The current rate or the previous rate as their dot. 6 want no more cuts after this one. 9 want 2 more cuts. And one official, I guess we can guess who it is, wants 5 more quarter point cuts this year, or 125 basis points, bringing the Fed funds rate down below the median neutral rate. So there's a big time dove on the committee. I think the committee at the headquarters here will have some fun figuring out who exactly that is. The median wants 1 cut in 27 and 1 in 28. So I'll give you the numbers now. 3.6 is the median forecast for this year on the funds rate, down from the current of 4.125. So that's 2 cuts. 3.4 for 27 and 3.1 for 2028. A little bit more on the economic outlook. Core inflation unchanged. The outlook for this year at 3%, unemployment unchanged at 4.5%. GDP pushed up a little bit to 1.6 from 1.4. 5 members want to go below the 3% neutral rate in 2026. That's up from 2 in September. So they're looking for a little bit of stimulus down the road next year in the funds rate. 6 want to do so by 2027. Brian, I'll send it back to you and the smart people around the table there to make sense of all this.
Well, it's a pretty smart person down there in D.C. too, Steve. Should we assume that it is new Fed member Stephen Myron that is calling for the 5 quarter-point cuts over the next couple of meetings?
This was my speculation leading into this, and that's what I think it is, Mike. Brian, I think it's Stephen Myron.
The Trump guy wants a lot of cuts.
The president's bidding, calling
Interesting.
for very sharp rate cuts immediately. I guess that would be, in order to get there, you'd have to have a 75 and a 50.
Our rates are coming down now. We were at like
75.
I would say 5.80 to 6 5/8. We're coming down. I think we're probably 5 5/8 to 6 1/4 now for investment grade credit. Anything
Canadian reference.
triple B minus,
in the Northwest
S&P
Territories,
triple B minus or better.
Up and out there,
5 5/8 to 6 1/4 and a 5.7 10-year fix with a 25 to 30-year AM.
To get the dot.
We can go as low as like 110 to 130 minimum debt coverage. Call me if you need a quick back of the napkin underwrite pricing for your
thank you very much.
Starbucks, 7-Eleven, Chick-fil-A's,
is still there.
Chipotle, Tractor Supply, all those different net lease
internet
deals.
so I can compare the two.
This is the time to go in and refinance, cash out.
Well, hearing about
If
that
you've been
dot plot,
sitting
maybe
on the
I'll
head-
come in defense
the
of the dot plot.
sidelines,
There'll be a
this
lot
is
of
the time
comments
to
about
come
this
in.
being very political in nature, but this wide dispersion in views on this Fed.
The Fed wasn't political.
All right.
Well,
Well,
it's
it's happening. Did
It's
the 10-year note go
independent. Let
down?
me
It
just
went
say,
down to
because there's going to be
4.01. Let me
questions
see.
about this,
Well, it did
that
come
there
down
is a
finally.
lot of
Let's see.
confusion about the state of the U.S. economy now. It's not
Yeah,
clear how
yeah,
much of
it
the
just
labor
hit
market truly will be
3.99.
weakening. When will tariffs come through? And some
So
of this
the 10-year
dispersion we
note
might be
just
seeing in
hit
dot plots, some of
3.99,
it,
which
not all of
is
it,
incredible.
may very well be
First
a
time we've
reflection
seen
of the
a
confusion of this
three handle
economic
there.
moment. So we have to be careful about taking any headlines about the median
Interesting.
dot here from what I'm hearing, because we have
Interesting.
huge dispersion within Fed members. This is
So
going to call
10-year
more
Treasury
attention
is going
into
the right
absolutely
way.
who
That's
is
good
going to be at
news.
the Fed and who's going to be
Even
leading the
long-term
Fed back
rates
to
are
many
going
months from
down
now.
now.
I think this is actually really important that
Post
there's only
that.
1%. Because what that tells me is
Wow.
that even though Governor Bowman, Governor Waller may want the job of Fed chair, they're
So
not
a
willing
lot
to
of
go
my
against
lenders
the
have been
consensus of the
saying
Federal Reserve
like,
in order to get that. I think that is a very, very
180 to
positive
200
statement.
over.
So,
That
I
puts
think
you in right
that,
around,
Jay Powell is Mr. Consensus.
like
He
I
wants to
said,
get
I'm
consensus.
thinking,
Clearly,
you
he talked
know,
to everybody before this
5
meeting.
5/8
And
to
to
6
me, the fact that they
1/4.
they're not
So
going
you're
to fall
gonna
over
you're gonna
themselves to say
debt
50 basis
coverage
points now, even
much
if they
much
want
better.
more Fed easing. I think that's
You
a very
know,
positive
so
sign.
if you've been
Because
sitting
it
on
says
the
the Federal Reserve as an
sidelines waiting to
institution regards its
refinance,
independence as tremendously
definitely
important,
call me.
and they're not going
I'd
to
love
fall
to.
over
I'd love
themselves
to talk to
to
you.
do what the
All right,
administration
I'm
does
going
right
to
now. I think
pause
that's a
until
very positive
Jerome
But our
Powell
job,
here
Jim, here is to
starts
look
to
ahead.
do his
And
testimony,
if we are
and we'll
to
be right
assume
back on
that
here right
Stephen Myron
around
or somebody
11:30.
else may become the next Jerome Powell, and that person is incredibly dovish, they want a lower rate,